Hello trade pros and welcome to another YouTube video at Trade Pro Academy. Today I'm going to discuss 4 tips with you and a process that you could follow to eliminate revenge trading from your repertoire. Now this is very important because we're going to identify the triggers of revenge trading and 3 tips how you could remove these triggers and give yourself a chance to start trading like a professional. This video will help you take your trading to the next level. So let's get started. But before we do, please hit the like button and subscribe to our channel and hit the notifications bell. We release videos daily and you'll learn a lot. Let's dive into this video. So tip number 1, you're gonna have to actually start by identifying the trigger that actually gets you into revenge trading mode. I'm often baffled by how few people think of this as a trigger and then reaction type of setup in their repertoire and in their routine. So here's the thing, the trigger for your revenge trading doesn't actually happen after your first losing trade. It happens before your first losing trade. Now, a lot of people will be baffled to hear this, but I'm gonna tell you this. Nobody really thinks that they're revenge trading when they're having a great day and doing nothing but making money every single time they put a trade. At that moment, they tell themselves, it's because I'm genius. My strategy is great. I'm doing amazing. No one thinks that, it may still be a problem of revenge trading, but the symptoms aren't showing up because the market conditions are favorable on this one day. And then the next day, you run into the trouble and you say, well, what did I do? Why did I revenge trade today? Was it that you actually revenge traded both days? But on the one day, the outcome was positive and you gave yourself the false expectation that you were profitable on the back of your strategy. This is super important. So you need to realize that revenge trading doesn't actually happen after your first losing trade. It happens before you even place your first trade. Now, let me explain this a little bit. The symptoms of revenge trading are felt once you hit a loss and you just want to make it back. However, if you have no trading plan or rules that you're following or trading filters that allow you to really scale down to the only highest profitable trades and miss the rest, you're going to be one trade away from always revenge trading. And so let me give you a few pointers here. There's only really 2 reasons that you could be revenge trading to start the session. Number 1 is that you don't have a trading plan. And number 2 is that you aren't following that trading plan. Because if you don't have a structured approach to your entries and you don't know when you're supposed to be entering the market, how will you enter the market at a high probability area? Now, the reason that if you have a plan and you aren't following it, it boils down to a few subcategories that it could be. This is 100% a psychological issue. You either don't have the right mindset, you're in a lack mindset, and or likely you don't have a performance mindset yet. So if you have a trading plan and you're not following it, this is 100% a psychological thing that you need to work on, which is great because this is an opportunity for you to improve not just your trading, but your entire life. This is why we often tell our traders to start with the psychology course because our most profitable traders who have gone through our program credit our NLP trading psychology as the biggest reason as to why it is. It wasn't the market knowledge, it was all up here the whole time. And that shouldn't be a surprise. Now, if you don't have a trading plan, it's time to create one. It's time to put these rules into writing so they could allow you to identify only the highest probability trades. So that's number 1. Number 1 is identify the trigger that caused you to revenge trade. And it's likely that you don't have a trading plan or you're not following it. And then identify why you're not following your trading plan or create one to begin with. Before you move forward with this video, this is absolutely the biggest thing that resolves this revenge trading issue. The second thing is to actually create your strategy now and to revise your trading filters. I'm going to read you a tweet from somebody I follow. His name on Twitter is Jim Scalpert, Scalpert. And he said this following tweet, and I retweeted it on my account, Trade with G. This is beautiful and very poetic, so I'm going to read you the quote from him. He said, "You want to increase your profits? ? Limit your losses. You want to limit your losses? Limit your trades. Do you want to limit your trades? Limit your setups. Addition by subtraction." And I think, honestly, that's one of the most beautiful things I've ever heard on this topic. So shout outs to Jim. That's great. All right. What you need to do now is to work on filters as part of your trading plan to help you be more selective of your trades. Once you've done this, you really want to wait for key levels. A lot of the trades that end up triggering revenge trading is when you get into a level of the market that you weren't supposed to. You planned to get here, it got there, it felt risky, you missed the trade and went up here, and now you're going to buy it at a place where you never planned to because it's a low probability trade. So once you miss your level, you get FOMO and you execute right in between the two levels. You should have bought here, you're targeting here, but you end up buying here, get stopped out, it comes back to where you should have bought to begin with, and then it rips and hits your target. But instead of you taking profit, you're taking a stop loss. Ask me how I know this sequence. I've been there and I've done that. The way to get through this is to only trade at your key levels, and you do this by filtering out all of the opportunities that come up. On any given day, you could be long and short at any given time, and you could come up with reasons and make it up in your mind as to why you think that. But that doesn't mean it's a high probability trade. So with a plan and very tangible filters that help you be more selective of the trades you take, you're giving yourself a chance to be only taking trades at high probability zones and levels. If you don't know how to create trading zones, that's the easy part. Once you have a zone or high probability area, this is where you want to put your trade in, and you want to execute it with meticulous discipline. What this does for you is twofold. Number one, it gets you into high probability areas. Number two, and more importantly, it actually reduces your trades, reduces your cost of commission, and it eliminates the losing trades. The problem with trades that you would have lost that you now don't take is that they don't show up on your trading journal. And oftentimes, traders get bummed out. They say, I only traded 3 times today. I could have had 9 trades. But if those other 6 were losers because they weren't high probability, you could see how that really muddles your results and puts you in a negative place in your trading journey. Look at it this way. Where do you get on a train? At the train station. A level in the market is a train station. You don't get on or off a train in the middle of 2 stations because you're walking right through the tracks, and that's how you get run over and tragic things can happen. So treat the market like train stations. Get in and get off at your levels and not in between them, because that's where the danger is at. All right, now on to tip number 3. You have to now hold yourself accountable. You've identified the trigger so far. You've created a trading plan that filters out all the nonsense trades, and you're left with just the high probability ones. This is where things could go wrong, because up to this point, it's easy to get here because you're planning. Now you're back into execution, and you have to carry out this plan you've created. This is where you could drop off and get back into revenge trading, which is a place we don't want to go ever again. All right, we've put that in the past. We've decided that's no longer our identity. We are not a revenge trader. We are a profitable trader. So you could say that to yourself and believe it, because now what you need to do is find an accountability partner. Oftentimes we think of the benefit of trading that you don't have to work for anybody. But if you don't have to work for anybody, you're working for yourself, and you may just be a worse boss than the one that you used to work for. Now I'm going to explain this a little bit. Accountability partners are best used when they review your journal and you review theirs for them. This is a set of eyes that are going to review what you've done. So when you're in the day and executing a trade, you're not thinking about nothing. You know in the back of your mind that you're going to have to explain this trade to somebody. That helps you be more selective of your trades and helps you avoid the revenge trading, because nobody wants to admit that they revenge traded at the end of the day. In the moment, we find ways to justify it. Like, I really think this is going to go up. Or yes, of course, I bought it 9 times, but the 10th is going to work because there's a support right here. You're going to find things that make sense in your mind, but at the end of the day, you're going to know it's revenge trading, which is great if you do it one day, but it becomes a problem if you do it many days in a row. You now create a habit that's very dangerous, and it's harder to undo a habit than to create a new one. So to prevent yourself from creating a revenge trading habit, your accountability partner will be on top of you, and it will give you that mindset in the real time that what I'm doing, I'm going to have to explain. The most dangerous thing in the world is to trade by yourself in your bedroom and tell nobody about it. This is why one of the biggest benefits of TradePro Academy is to have professional traders who can and are willing to become your accountability partner. And now, before we get into the last tip, I just want to quickly review. Number 1, identify your trigger for revenge trading. Number 2, create a trading plan that filters out the bad trades so you don't have to trigger your revenge trading. And number 3, have an accountability partner to hold you accountable to the new trading strategy you've created and the way that you execute it. This is a feedback mechanism. The last step of this process is going to be to remove excess capital from your trading account. Many people at the beginning think they need to put as much money as possible so they can make a ton of money quickly. However, at the beginning, when you're new, you're in an entry-level position. Having a big trading account is something that you earn the right to have and not something that you gamble your way or YOLO into. So this is very important. I think that most people these days are starting with far too much capital, and it's extremely dangerous, especially when that capital is borrowed from a line of credit, from a credit card company, from your mother, from your brother, from all your sources, promising them riches within weeks. The problem with that is now you have more capital than you're capable of controlling. You don't have the experience yet to trade that size account, but that's okay because that's always going to come later on in your journey if you could first start to trade successfully with small size. Believe it or not, one of the big causes of revenge trading is being over leveraged, taking an outsized loss that you couldn't stomach or handle to begin with, and now getting into the mindset of, I just want to make this back. We know how that journey ends with a complete account blowout, right? Save yourself the embarrassment and start with less capital. These days, if you're a futures trader, $500 is more than enough to trade the micros. If you're a stock trader or an options trader, you may need a little more capital, but it's important to start with a smaller account and earn the right to trade bigger. Put it this way, at the beginning part of your journey, you need to trade small if you're ever going to have a chance to trade big. Capital is really a reward for the quality of trading that you're doing. And the quality of trading that you're doing is dependent on your experience level. Therefore, if you don't have a lot of experience, the quality of your trades aren't really suitable for a large account size. You do not need the leverage at the very beginning. Start with the focus on the process, all right, and make it a goal to see consistent returns on a small scale and reward yourself with more capital allowance. I don't care if you have $10 million from selling your business, you should start with 500 in the futures market. In fact, many of our traders who have sold businesses and have multi-million-dollar net worths start smaller than traders who only have $10,000 saved up and decide to dump it in all at once. Really, success is created and scaled up. So start small because at the beginning, the more capital you have with less experience, the bigger the liability that is. So my tip to you is to withdraw as much money as you can and keep a small balance in your account. That way, if you do revenge trading, you don't have too much to blow out, even if you have a horrific day. And if you don't have much in your account, you aren't going to get susceptible to YOLO yourself in a position with a $400 trade now to put in $20K to hope it comes back and the inevitable blowout happens on a large scale. Blow out small, learn while you're doing that, and manage your trades and manage your risk and be disciplined. Reward yourself on success. You could always add money into the account and it feels better when you're winning. But here's the thing. With futures markets, with options and stocks, the amount of leverage you have, you shouldn't use at the beginning, but the more that you become consistent on a small scale, the more you're going to learn. You don't need any more capital than you started with. Yes, $500 is enough to earn a living, but you have to start there to understand that for yourself. I've recently been doing a small account challenge in futures where I started with $464 in my account. And within 5 days, I've worked it up to be just over 5,000. Now, this was great market conditions, mind you. There's not a past performance is not indicative of future results here. But what I'm trying to show you is you don't need a lot. I have the experience level to do that, but this shouldn't be your target. Go for $50 a day. Go for $40 a day. And while that might not seem like a lot of money, it adds up fast in capital, but more importantly, it adds up fast in mental confidence, mental capital, and psychological experience. On that foundation, you could build a huge account. Become a better operator, you become a better trader. Hopefully you enjoyed this video. The 4 steps recap are find a trigger, create a trading plan, find an accountability partner, and you reduce your trading account size so you can protect yourself while you're learning. If you guys enjoyed this video, hit the like button and subscribe to our channel. We come out with content every single day, and it's always as awesome as this. Please put in the comment box if you enjoyed it or if you have any questions, and I'll answer to you personally. Thank you guys for watching. Have yourself a fantastic day, and remember, manage that risk and trade like a trade pro. Take care and goodbye.